Good morning, everybody. This is Jim Cagnino with Infinity Futures. We're going to go ahead and get started here. A couple housekeeping items. First of all, you're here to see the live trading webinar with Gavin Holmes of Trade Guider. More about Mr. Holmes in a second. My name is Jim Cagnino with Infinity Futures, and what you are witnessing on your screen is the Infinity AT Trading Ladder trading platform, which is looks straightforward, but it's mighty powerful. Keep that in mind as you go through today's presentation. I do want to remind everybody trading futures, options on futures involves substantial risk of loss, not suitable for all investors. Oftentimes in futures trading we have a high combination of leverage and volatility, and although that could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle or lengthen my retirement horizon. If you're not sure where you fit on the risk capital curve of things, call your Infinity Futures representative or reach out to them by Skype or email or whatever, and be happy to have a confidential conversation with you, as I will also. This is Jim Cagnino. The representatives here are all passed a Series 3 examination, and they're NFA members, registered with the CFTC, and almost maybe equally as important, have been interacting with traders in these markets for years. Everybody here is, in my opinion, very experienced and qualified. So feel free to reach out. Use that free service as you're going through the discovery process of whether trading futures is right for you or not. And then lastly, past performance not indicative of future results. So be careful when anybody says they made this, they did that. Post-performance results, talk about past trades that were fantastic. Keep that in mind. The paradigm in the market always changes, and what worked yesterday might not work tomorrow. All right, any questions on risk or infinity or any of that stuff? Type them in right now. Demo versus live trades. Yeah, that's the other thing about, keep in mind too when you're listening to somebody, the blue backgrounds you see on my trading dome right here indicate that it's a simulated trade. It's not a real trade. It's real-time data, real-time functionality, and the experience is pretty close, but this is not a live trade. If it was a live trade, the trading ladders, the background wouldn't be light blue, they would be gray. This area would be gray. So keep that in mind too when you're saying this. All right, so let's introduce Gavin. Gavin, as you know, is the mastermind, CEO, founder of Trade Guider, and he has, in my opinion, a fantastic software which integrates nicely with the Infinity AT trading accounts. Hint, hint. He does have a kind of an interesting accent, although unless you live in UK, then you wouldn't think it's interesting because you you have it too. But in any event, we appreciate Gavin taking time out of his busy schedule to do this. He's doing it for free and out of the goodness of his own heart, I hope. Gavin, how are you?
Hey Jim, how are you? Very good, thank you very much. Yes, looking forward. Actually, we've got the hottest day in the United Kingdom that we've had for 40 years today. It feels like Chicago. I'm sitting here in a t-shirt and shorts in my trading office, and the trading office here is 24 degrees. So I'm in a sauna right now.
Well, wait, what is 24 degrees in Fahrenheit?
It's somewhere about nearly 85, 90. It's about, yeah, it's pretty high, and it's humid as well because we live by the sea. So it's pretty warm. So yeah, wow. It's hot. Yeah, but there we go. So should be a good session today. Looking forward to it. So yeah, you've read the disclaimer, so I don't need to do that. So let me take the screen. First of all, can everyone hear me? Let's just do a quick sound check. Okay, let me just I'm just getting some trade alerts coming in right now, funny enough, just as we've started, but that's not surprising because it's 9 o'clock New York time. Let me just get the one of the screens up that I want to show you. Okay, good. All right, let's get going. I'm assuming you recorded this, so nice to see everybody. Hello and welcome. Got a lot of you here. First and foremost, before I get started into the actual presentation, just very quickly, if you're new, this is your first presentation from Trade Guider. I know there's a lot of regulars, I can see you, but if you're new, could you just type in N for new? Because I know that we've had a lot of new people into our database in the last week. So I don't want to lose anyone here, but there's a lot of people who've been following us for 15 years. So you might have seen some of this presentation before, but certainly you won't have seen some of the things I'm going to show you this afternoon because I've got some new stuff for you. All right, I can see a lot of people here are brand new, so you don't know much about what we do potentially. So first and foremost, okay, one of the things I'm going to be showing you today, I've already been in a trade today and I actually recorded that trade and it was in gold, okay? And I'm going to explain to you the entry, the exit. I'm going to explain to you why the market moved the way it did and why I took the trade. Because one of the things I hear frequently from people about these trading webinars is they want people want to understand certain things. So let me ask you as an audience, before I really start this presentation, what do you want to learn today? What do you want to learn today? What do you want to take away from this webinar? Just one piece of information that would help you. Could be a trading plan, it could be finding entries and exits, it could be understanding volume, it could be all sorts of things. Just help me. Type in what you would like to learn from this webinar and what you would like to understand at the end of it, because I'm going to be with you for probably about 90 minutes, maybe slightly longer. But I want to make sure that, you know, when we show you stuff, that you understand what we're talking about. Okay, so there's loads of things. Trading plan, okay, how you get ready for a trade. Create a consistent trading plan for new people. Learn a trading plans coming up a lot. What to look for a wide range bar with ultra high volume to enter a trade. That's an easy one. I can show you that today. How volume affects the future price movement. Entry, exits, chart capabilities. Perfect. All of this I'm going to cover. Understanding volume, okay. Interpreting the bid-ask volume interaction. That's a little bit more complex, but I'm going to try and keep that a little bit simple today, Timothy, but I will cover some of it. I'll touch on it. Yes, the sound is definitely on. Everyone can hear me. Basic signals, says Alex, of the VSA system. I'm going to show you some really good ones today. I don't like to use the word basic because they're all quite detailed signals, but and then Trifone says deciding which VSE signals to actually take. Perfect. All right. So I'm going to cover today the futures markets. I'm going to be focusing a lot on gold today, but I will look at the other markets as well. I want to just explain a few things here before we start. Now, who am I? Some of you don't even know me. My name's Gavin Holmes. As you can tell, I'm a Brit. I spent 15 years in Chicago working downtown with the team at Infinity, who I want to thank for putting on this webinar. They are my broker and have been my broker for the best part of 12 years now. I've never had any issues, always been able to ring up the guys. They're very quick to deal with any problems I ever have, and I've had very few. And as I said, the late Tom Williams, for those of you who know Tom, also had an account with Infinity. They're a futures brokerage firm, just be clear on that. So I'm going to talk today about futures. And I'm delighted to say that in July, I'm going to be trading live from the Chicago Mercantile Exchange, the CME group, downtown Chicago, sponsored by Infinity, and I'm doing a special course covering a lot more than I'm going to cover today because it's over 2 days. Tell you more about that later. I'm also an author. I've written 2 books. I'm finishing my 3rd book at the moment. My first book was called Trading in the Shadow of the Smart Money. The second book, The Complete Volume Spread Analysis System Explained. I'm going to give you today my first book as a PDF and a video that goes with it. So if you like what you hear, halfway through, I'll put up a link where you can actually go and download the video and the book. Okay. I'm also a fund manager here. We're trading a private fund at the moment. We've had an investor that's put money into the business. We're trading a private fund at the moment, and then hopefully we go public at the end of the year. That was my career. That's how I wanted to start my life. That was me when I was 18 and a half years old. I joined the Hampshire Police Service. I'm a former police officer. I was in the police for 5 years before being injured on duty and then retiring. So I had to take a different path in life. Now, my path went in different directions, but I was very fortunate 16 years ago now to have met the man that changed my life. His name is Tom George Williams. He's here. Unfortunately, he passed away in November of last year, but we together did webinars and seminars, thousands of them, all over the world, just like I'm doing today. I've probably done best part of 100 webinars with Infinity and many other companies as well. But we do live events, and we do live events all over the world. We're going to be in Australia, we're going to be in London, and of course we're going to be in Chicago. Now, we launched something that I'm going to show you today called the Sharpshooter, which was part of our smart trading strategy, which I'm going to give you the written plan. I'm going to give you all the written plan. It's 30 odd pages. Okay, you're going to get that for nothing. Don't even require your email address. Okay, and that plan is the basis for what I'm going to show you today. Now, before I get into that, there's a lot of new people here. So I just want to play you a very short video. It's about 9 minutes long to give you a flavor. And I'm going to talk to you today about some trade setups that are not only happening now, that have already happened this morning and are setting things up for tomorrow. So you'll see that we're not just talking about things that happen in the past, because one of the things I know people don't like is they say, well, hold on a minute, Gavin, everyone can look in hindsight, can't they, and say what's going to happen. But we have a YouTube channel which has got 6,000, 7,000 subscribers now. I think it's over 6,000. And on the 9th of June, okay, you can see this has already had quite a lot of views. On the 9th of June, I gave a video to my customers and potential customers. I said, the Big Short, it happened and it's coming again. The video explains the collapse in the USD GBP and 6B contracts, which is the pound, as detailed in the video 2 days ago, and the impending collapse in gold GC futures. Note there the date, the impending collapse in gold futures. So I'm going to explain to you today, okay, why gold has done this. I'm going to explain to you today the system that's built into and is now part of Infinity AT Charts, which is the charting platform that I use to trade futures. I'm going to explain to you some of the signals that have come in actually only yesterday, which could drive the market further down. Okay, so we've got a lot of opportunity in this contract, and we have a live trading room that we run every day for 3 hours with my colleague Steve Phillips. And I'm going to show to you and explain to you why the markets are going to set up over the next 2 or 3 days for some very big potential trades. But before I do that, let me play you this very short video, and we will, of course, be recording this, and you will get a copy of that as well.
What is a smart trader? A smart trader is someone who knows how the markets really work. They know how they move, why they move, and who and what moves them. Armed with this knowledge and understanding, they can trade in the markets alongside the major players. Smart traders are in the minority. The majority of retail traders and investors do not have this information. They rely on technical analysis and fundamental analysis to predict market movements. The problem for them is that on their own, these tools and methods don't work, which is why the large majority of traders lose to the markets. Remember, the market needs losers, many of them, so that the informed minority can win. Today, we'll show you how you can become a smart trader, trading in harmony with the professionals rather than trading alongside the herd. So why do so many traders lose? They lose because they've not grasped some fundamental facts which drive all markets. Fact number one, by far the largest players in the market are the hedge funds, investment banks, trading syndicates such as Goldman Sachs, George Soros, and Berkshire Hathaway, headed up by Warren Buffett. These are organizations you've probably heard of, but there are many others which aren't publicly known. But together, they're by far the biggest players in the international trading community. At TradeGuider, we call them the smart money. Fact number two, the smart money have to make money, and they do this by selling at the top of the market and buying at the bottom. Fact number three, in order to do this, they have to move the market so that the prices rise to the top or fall to the bottom. So, how can they move the markets? Tom Williams, inventor of volume spread analysis, was a syndicate trader in the US and is one of the very few smart money traders to spill the beans on how the markets really work. He explains how the markets are moved.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low depressed prices. And the best way to do that is to create bad news, put out rumors, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, it was complete fabrication. Then the directors would look at each other and sort of shrug their shoulders, but the audience heard that and they think, aye, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all because we bought at the lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing, if the opportunity is there.
Markets have always been manipulated. Here's just a few examples. Let's begin with the British petroleum oil spill disaster in 2010. On the 25th of June that year, the shares fell to just under $27. The news was grim, and the pundits and reporters were talking in terms of huge losses and a possible breakup of the company. And everyone who had shares was looking to sell in full expectation that prices were plummeting. And sell they did, straight into the hands of the smart money professionals who bought cheap. Within 6 months, the price of the stock doubled. Buy cheap, sell back when the market rises, and that's how the game is played. On May the 6th, 2010, something very strange happened in the financial markets. This day is now referred to as the flash crash, because no credible explanation has been provided by the regulatory authorities as to exactly what caused the crash or who was responsible. In fact, many investors begin to suspect that all was not what it seemed to be. CNBC's closing bell anchorwoman Maria Bartiromo was reporting on the day the flash crash happened. Fellow reporter Matt Listo was explaining some unusual anomalies in a number of stocks, even though the mainstream media claimed that it was caused by a lone trader hitting the wrong button, B for billion instead of M for million. Maria saw through it straight away.
Okay, so those are at least 8 names that they're going to have to track down on top of the Accenture trade, where we have the stock price intraday showing us at least, we'll assume, a bogus trade of 0.
That is ridiculous. I mean, this really sounds like market manipulation to me. I mean, this is outrageous.
It happens a lot, Maria. It really does. I mean, we could probably ask the NASDAQ. They may not want to say exactly how often it happens, but it happens frequently, and they go back and they correct. And the thing that stinks is if you, in good faith, put in a trade and made money and then lost it, you lose it.
What we actually witnessed on May the 6th was a giant shakeout of the market. The smart money were expecting higher prices and wanted to catch the retail traders by marking the price down heavily before moving the price up. They were bullish, the stocks were going to rise, and they wanted to buy at the best possible price. Wouldn't you want to do the same? Buy it at the lowest price, knowing you could sell it later for much more than you bought it for. Qantas soars to record half-year profits is the headline on February the 23rd, 2016. Lower oil prices have helped Qantas post a record pre-tax profit, and best first half profit in the Australian Airlines 95-year history are used directly below the headline. All the news is bullish. The stock has been going up and up because it's in an uptrend. To the retail trading and investing community, this appeared to be a great opportunity to buy the stock because everything lined up. And if you didn't go into the market by now, you'd miss the move. Okay, so buy, buy, buy. What happened? The stock plummeted spectacularly, and the uninformed retail traders said bye-bye to their capital. That's the trading game. Buy low, sell high. Be a predator, a clever predator that understands exactly how the prey think and act. Smart traders appreciate this and understand that quite often all is not what it seems. The media, the sentiment and the emotions will often lead to poor trading decisions and big returns for the professionals. The good thing is that whilst the smart money try and disguise their activity, there's one place where they cannot hide: the price chart. And in this presentation, we're going to show you how to read the footprints left by the smart money on any price chart, whether it's a currency pair, a stock, commodity, or a derivative of some sort. In the next few hours, we're going to show you how the interrelation of price and volume can help us determine whether the smart money is buying, selling, or not participating. And it's this interrelation which forms the basis of the volume spread analysis methodology. We'll show you how you can identify the tops and bottoms of a market in foresight, not hindsight. We'll show you how you can use the three-stage trading process, scan, confirm, trade, to form the basis of a powerful trading strategy so that you can trade in harmony with the smart money. We'll show you techniques that will help you manage your risk and optimize your trading. We'll show you why the media is key and how to trade the news and the volatility often caused by it. In the next few hours, you'll learn things which will enlighten you as to how the markets really work. And you'll discover knowledge that only a small fraction of the trading community know and understand. So welcome.
Okay, thanks everyone for listening. So, trading in the shadow of the smart money, which is what we're going to be talking about today. I'm going to introduce you to a strategy called Sharpshooter, which is a scalping strategy, but you can use this very same software I'm about to show you for using swing trading, which is something else many people do if they're trading futures. What we're going to talk about is what's really in my book, Learn to Trade in the Same Direction as Smart Money, or the professional side of the market. This method I'm going to show you is based on a trader called Richard Wyckoff, who developed the initial trading strategy back in the 1930s, would you believe? Can I just ask the audience, how many of you here, just yes or no, have heard of the trader Richard D. Wyckoff, who was a trader from the 1920s and 30s that also talked about smart money? Does anyone, how many people have heard of it? Oh, there's a lot of yeses. Yeah, okay, not surprising. Few no's, okay, that's fine. Oh, well, you'll learn a little bit about him today. Okay, I'm not totally surprised that the majority of people in the room here have typed in yes to that question. And it's not surprising to me because the Wyckoff method, which is a method that the hedge funds don't want you to know about. I mean, here's an article from Business Insider magazine, and it reads, the large operator does not as a rule go into a campaign unless he, and I'll add or she, sees in prospect a movement of from 10 to 50 points. Livermore once told me he never touched anything unless there were at least 10 points in it according to his calculations. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. His 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique. It's out of print, somewhat difficult to find these days, not impossible, it's on my bookshelf here. But even in 2013, when this was written, hedge fund managers still swear by it. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. So the basis of what I'm about to show you today is based on these two great masters. On the right, Richard Wyckoff. On the left, the late Tom Williams, who computerized what Wyckoff had found in the 20s and 30s that worked for him, and he was a very wealthy guy, lived in New York. Tom computerized it. So Wyckoff passed away in 1934. He was a stock market authority and fountain and one-time editor of the Magazine of Wall Street, which he founded in 1907. And you might be thinking, what's that relevant to today? You're going to see it live, actually, right now, because I've got alerts coming in on my other screen here. Thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future. and that these indications are accurately recorded in the market transactions second by second. And therefore, those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. So said Wyckoff. VSA, volume spread analysis, which is the method we teach, measures the forces that drive the markets. Successful tape reading, says Wyckoff, is a study of force. It requires ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. Tom Williams passed away November the 7th of last year. If you can read a chart correctly, you will understand that markets do not move randomly, but are moved by smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume and price. And you have a chance, just a chance to profit by following their footsteps. Remember, trading involves risk. So everything is always about managing risk because, yes, you're trying to make profits, but you've also got to manage your losses. And that's something I'm going to show you today in the sharpshooter strategy. It teaches you don't risk a lot of money in the market once you take the trade. Reduce your risk at all times. Volume is vital in your analysis, says Tom, which is why the self-regulated exchanges around the world will not release true volume figures until the day after trading took place. So we have a website, okay, which talks a lot more about what volume spread analysis actually is, but I wouldn't go there at the moment because, quite frankly, I'm going to give you a book and a video which you can go and look at tonight, and please do. The book took me best part of 4 years to write, and it's got knowledge in there that once you've got it, you'll have it with you for the rest of your life. So what is volume spread analysis? Okay, I'm going to show you a video shortly of an actual trade that's been taken today, and looks like it's setting up again, funnily enough, as I'm doing this. So the volume is simply the number of orders that are going through. In futures, which is what I'm talking about today, it comes from the CME group, okay, the majority. You can trade other futures contracts as well. Today I'm focusing on CME contracts. Then we have the closing price on the price bar, okay, and then we have a spread of a bar. So imagine this was a daily price bar, okay. This would be known as a wide spread. All right, don't confuse it with the bid-ask spread. It's not. It's simply, really simple. It's the high of the bar and the low of the bar. Right? That's all it is. And then we look at the volume. And in fact, we can see in the British pound how important unusual volume actually is. Because if I go to the pound for a second here and show you what I draw here, these are what we call trigger lines. They're places to take trades. There was a daily trade that came in for swing traders 4 days ago. Now, I'm going to explain it all to you because this was the YouTube video that I decided to do on the 9th of June because I knew the pound would fall because of look at the volume on this bar. Now, as the price rises, the TV pundits, the people on the media say, oh, the pound's strengthening. It's going up. Everyone thinks the pound is going to be fine. But they're not telling you the truth because it's the complete opposite. Because there are two rules you're going to learn today, and they're very simple ones. When weakness comes into a market, meaning there's an opportunity to sell in the future, it happens on massive volume up moves. When strength comes into a market, it happens on the opposite, on down moves, where the news is bad. So it's the complete opposite of what you think. People, and I have to admit, I had great trouble with this myself. When Tom said to me, the price is going up and you should be ready to sell it, I'm thinking, well, why on earth do I want to do that? But then I think of the logic. If you go to an auction and you want to go to a car auction, for instance, which I did the other day, because I was looking at some very nice cars to buy. And I looked at one of these vehicles and I went to the auction and it started off at a figure. Let's give you an example. Let's say it was £50,000, right, for the car. So they go 50,000, 50,000. Now the auctioneer didn't go, okay, we'll do 49,000. He won what, 38,000? He didn't go down. He kept marking the price up and everyone was bidding. The financial markets work in exactly the same way, ladies and gentlemen. Right? They mark the price up, they encourage buyers, and then they sell the hell out of it. And that's exactly what's happened in gold as well. Because I'm going to show you today where the selling happened, and I'm going to show you the actual setup, the trade that I took earlier, and we'll try and take another one live. All right? Now, the trade I took was with what we call the Infinity AT platform. Now, this is the trading ladder. Some of you will be familiar with this. Some of you may not be familiar with this. I was focusing today only on crude oil and gold, okay? They're the only two things I was looking at. For the moment, that's because I knew gold was particularly weak. So I took the trade, and I only took a one lot trade, okay? So I took a one lot trade, and I took it as the market showed me that it would become weak. And I'm going to, unfortunately, because, you know, sometimes you're in a live webinar teaching, like I'm doing now, I know I can see my other screen here, multiple alerts going off, but I can't lose my track. I trade real money. Let me just be very clear here. This is a live account. So when we're trading, and if I take a trade, it's with real money. And in our live trading room, it's the same thing. We have a live trading room we run every day with real money. So I want to just explain to you the actual principles of the setup. So why is volume so important, and how can volume spread analysis identify the moves of these big professionals? Well, it's quite straightforward. The golden rule, volume is activity. Okay, that's the first thing you must remember. Then the two rules are, when weakness appears in a market, it happens as it's being marked up, as it's going up, especially on unusually high volume. That's your footprint from smart money that they're beginning to sell. I'll prove it to you today. We, and I talk about we as either professional traders or indeed people learning to trade, should be interested in volume because it tells us the consensus of opinion amongst what the smart money are doing. And then the range of the bar and the closing price, as I'm about to show you, confirm what the move's going to do. And does it work in all markets? Yeah, it does. It works in all markets. Okay, so it doesn't just work in futures, it works for stocks, it works for options, it works for everything. So if you're a stock trader here today, I'm going to talk to you about why you should be trading futures, because I mainly trade the futures market. It's my speciality. There's a lot of leverage in futures, but also the one thing you can guarantee with futures at the moment is there's an awful lot of good education out there if you know where to look, and that's what I'm going to help you with. So who are the market participants? Well, I'm afraid to say it is exactly what you see here. On the left, you have the group that have to lose money so that the group on the right can make money. And that's how it works. Whether you like it or not, and whether you agree with that statement or not, I can assure you in my 16 years, having left the police service and having been very skeptical at the beginning of this statement, I have become convinced that this has to be the way it works. Now, there's very few educators that will tell you this, very few. And the reason is it can be seen as controversial, but it's not. If you look at the stories recently in the last 3 years about the market manipulation that's been going on in Forex, not futures so much, but mainly, you know, you've had a lot of stories of Forex manipulation, stock manipulation, manipulation of gold and silver has been pretty much hidden. But these stories are starting to come out, and people are starting to realize, the general public who are trying to make money in the markets are realizing there must be a clue to what's going on. So my job today, in this short time we've got together, is to get you to understand some of the key principles, some of which most of which I'm going to be teaching when I'm in Chicago and in London and Sydney. And what we'll be doing today is just giving you an opportunity to open your mind. I use the saying, your mind is like a parachute. A parachute is much best used when you open it. So all I ask of you today is to open your mind. I'm going to introduce you to the concept of scan, confirm, trade. I'm going to introduce you to a concept that shows you exits and entries based on volume. And to start with, we're going to start with this particular trade that we took earlier. Now, it's the GC contract, and it's setting up again right in the next 10 minutes. I suspect we'll get another trade here. So let me show you, so you look, because again, my whole purpose, I suppose, if you like, is to make sure that you understand some of the key things that I'm showing you. And when we took this trade earlier, okay, it was based on something that had happened a few weeks ago, as I'm about to show you. Not something that had happened today. I knew it was going to fall. And I'm going to give you the YouTube video so you can go and see the lesson that was there. Now, we're at a very key area, again, at the moment in gold, okay? So I'm watching it, and I've actually just had on my screen an alert, and I'm just waiting, okay, as I'll explain in a minute. Because we're trading at the same level, or very similar to the same level that I exited my position at, as I'm about to show you. Now, what I'm going to do, the video's got no sound in it. I'm going to talk you through what happened. I'm going to talk you through these VSA indicators. Now, these are red. And when everything is red in the sharpshooter strategy, which is, again, it's a proprietary strategy that we have programmed in to AT charts. Okay, so it's not something that comes as standard with your AT charts. We've physically programmed this whole strategy in. and it goes with a trading plan. There's a written plan with rules, which I'm going to give you, so you can prove it to yourself. One of the things you can do, wonderful thing about Infinity, is they'll let you use a demo account for 4 weeks. And we have now changed our pricing policy so you can get our system, because it's an expensive system, I won't make any excuses for that, on a 4-week basis, so you can actually prove it to yourself. And we'll not only give it to you for the 4 weeks for a fee, there is a price, we'll give you access to our live trading room so you can learn to use it. Because there's no point, in my opinion, and I know I had to learn this for myself. There's no point in giving someone a piece of software and a trading plan and they're not supporting them. It doesn't work. I know. And we do a lot of support. So does Infinity. Why do you think they do these webinars? So let me play this video through to you, and I'll explain to you not only the entry point, which you can see on the screen there, was up at 24.68 up here. Okay. It was just after here where I actually entered the market as it began to fall here on the smaller time frames. But let me play it through to you, okay, and then I'm going to explain it to you as we go through. So here we go. All right, so you can see the entry has been taken. You can see the sign of weakness that's appeared. But in the background at the top here where I'm pointing with the screen, you can see that the market's been marked up on very high volume. Okay, now what that means is the market has been marked up deliberately. And here's a signal which says supply entering the market, which means sellers are appearing. Now they're appearing as the market goes up, but the market overall is in a downtrend. So we see the sellers appearing in the market. And then over here, prior to the big move down today, we had a strong VSA principle. Someone said earlier on, I want to know which sort of principles to look for to take trades. These are them. Even this signal, the no demand bar, came in again later on after this trade. I was already out and had closed my trade. And I'm going to show you why I closed the trade as well, because that's important. Now you can see here that I've moved my stop from my break-even position to my profit position. That is part of the strategy. Here we see buying appearing. Buying comes in on the down move. Look at the volume associated with them stopping the move. They don't want the market to collapse yet. They're not ready. So we have strength coming in on that bar. Now you wouldn't buy that because it's in a downtrend. In a downtrending market, as I'm going to show you, you continue to look for short trades. You don't try and fight the trend. The trend is actually your friend. Remember what Wyckoff said? The force of price. Look at the high volume on the upthrust. The force of price is to the downside. It's like swimming in a river. You've jumped in and the river is swimming down. So you want to short that river. You want to go short. Now this signal that came in, the red one, okay, was not a reason to go short again because it was what we call a non-confirmed signal. That's my live account, just to be clear, when I took this trade today. And I also posted this trade, okay, as well. We have a new system where we're posting the alerts out for these different trades. And you can find more about that by contacting us. Now, one of the things I'm going to show you now is what we call trigger numbers. Now you can see over here where the initial buying, the attempt to buy came in, was where I actually began to move my stop down to. And I did, before I recorded the video, I was incrementally, as part of the strategy, moving the stop down with the market, all right? So always place a stop on an odd number, not an even number, okay? Now, 1245, of course, when you see that where it was, I was dragging the stop down on the odd numbers until we got to the key trigger area, which is where the buying came in initially. Now, you can see the two green indicators. The first one didn't move the market up. The second and third one didn't move the market up, so I was fine, I stayed short. But the third one did begin to move the market. So therefore, it was important to change my, well, to protect my trade. That's the first important part, okay? To protect the trade. The second important part is to then make sure you keep an eye on the chart to see if any further signs of weakness. As in this instance, this is called a sign of weakness, a sign of weakness. Signs of weakness happen in a down move as the market is artificially marked up to trap those who are using mathematical formulas. See, if you use mathematical formulas, the problem is as the price goes up, your stochastic says long, your MACD says long. Unfortunately, as it goes up, they're selling into it. Now here we have the first point of support. And it's now, funnily enough, live when I show you why the market's gone back up through this area, because I'll go to the live chart in a minute. is the reason it's happened that way is because support did come in at 12.43.60. There was no doubt about there was some support down there, but at the Open, the US Open, they marked it down even further to 12.42 before supporting the market, as I'm about to show you. So we look at the big picture as well as looking at these smaller time frames. This happens to be a 1 minute chart that I'm showing you on this one. We look at the smaller time frames. Now, when you actually combine time frames, you get a bigger picture of trend. And the sharpshooter strategy that I'm going to show you looks at multiple time frames. It doesn't just sit there and look at a 1 minute chart. It doesn't sit there and look at just a 5 minute chart. The biggest confusion I believe traders have, especially if you're scalping the market, is which is the best time frame. And the answer is there is not a best time frame. It doesn't exist, right? But there is, the market's fractal. It's always moving. So if you have a system that can measure multiple time frames, and we have a proprietary technology, you can see here, this is where the weakness came in on the 15-minute chart. Supply entered, you've got a double top, an upthrust at the area, the same area. So the market repeats itself. It gives you a clue if you know what to look for. And of course, that is the key. And I'm going to show you in this next hour exactly what to look for. Because once you understand what to look for, and we make it easy for you, by the way, because we give you a system, and you'll see the system in action in a minute, which actually identifies when these signals are apparent and why they should be considered to be a trade setup. And that's all I'm going to say. We don't tell you, you've got to buy here, you've got to sell there, right? This is not a black box system, by the way. This system is there to educate you about supply and demand. Now, you can see here on the 15-minute chart, we had stopping volume coming in. And the reason I moved my stop to try to protect my trade was because I saw that. And it was an old area to the left, right? So what I'd done, as you'll see there, I've moved my stop down, so I'm taking some profit out the market. I'm taking a little and often. I believe in the Alibaba theory. Alibaba and the 40 thieves. If you read the story, Alibaba found the cave. The cave was full of gold, right? But when he found that cave and he said, open sesame, he realized if he tried to take all the gold at once and be quick and take it, he would attract too much attention and he might get killed. So he didn't. He took one piece of gold every day, little and often, little and often, little and often. And he built a castle and he had lots of horses and donkeys. And then his cousin Kasim came up. And here, by the way, this is the daily chart quickly. I'll talk about it more in a minute. It was all obvious on the daily chart what was going on, as I'm about to show you. Okay, the next bar is down. I'll come back to this analysis. But what Kasim did, he went into the cave when he was told about it, loaded his cart up with as much gold as he could take, went down the hill and was killed by the 40 thieves because they heard about all the gold on his car. So the markets are very simple. You take a little bit and often, right? A little and often, you're not greedy. You can be successful in the markets. But if you go there with a big account and you start trading 50 lots and thinking, I'm gonna make money today, and then suddenly you have a big loss and then a second big loss, you're not going to be in the mood to try and trade anymore. And in fact, you'll get killed. You'll lose, just like Alibaba and just like Kasim, his cousin. So always remember, the markets are there every day. Little and often is a very good strategy, which is what Sharpshooter, which is our strategy document, is there to teach you. Because you don't have to be greedy to make money in the markets. Right, so you can see here that the trade was filled very quickly. That's why I like the platform. I trade with Infinity because, again, anyone who's going to trade with the platform wants a very quick fill. That's important. I get very good fills. And so that's one of the reasons for trading with this company. So now you can see here that on the weekly chart, this was just when we did the YouTube video, which I'm going to give you. That's the reason for it. Okay, and I'll explain it in a lot more detail in a second. That was the reason for it, because we had in the background here, right? And let's go to the live chart now, because actually what I can see is in the strategy, we've got some things happening that I need to show you. So let's go straight over to the Sharpshooter and introduce you to it. All right, so now we're going to live charts. No more PowerPoints, no more historical. All right, so this is the Sharpshooter trading strategy, okay? It's available to you to download. Let me just put it up here from this web domain. All right, and it's a document. It's a PDF document. It does not require any information from you. and just tell me if you can see the link. I've just posted it in the room. Can everyone see that, please? Can you just tell me? I've just posted the link to that in the room, and I'll show you exactly what this is actually doing right now. Can everyone see that? I just posted a link into the room to actually download it. Can everyone see that? And the actual documents, okay, are here. All right. So the one you want to look at is the futures strategy, which is just here. And if you left click on it, it opens. It takes a couple of seconds, 3 or 4 seconds, with the 24-page sharpshooter strategy document. Okay. And in this document, it talks all about. Well, I'm not going to go through it because you can actually view it at your leisure. Okay. It talks about the background of the document, and obviously the whole method that I'm about to show you was based on the work of Tom Williams, who computerized the method. So let's put the chart up. All right, now we've seen here in the ES, right here, we can see sharpshooter is based on time frames, okay, and the time frames that it's based on are based on experience and testing over about 15 years, okay, and we've tested this a lot of times, and these were Tom's favorite scalping time frames. So I'm going to actually show you which ones they are. Now, you can see at the moment that it's flashing. Now, you can see the time frames. M means minute. 30 is the time frame. So this is monitoring a 30-minute, a 15-minute, a 9, a 7, a 5, and a 3. So those are the time frames that this strategy is monitoring. You can see that in the NQ, we've also had what we call multiple time frame alignment. Now, again, I'll ask, let's just put that up there. Right. Let me ask my customers who happen to know about this signal as well, which I'm going to talk about. If you were using, there's quite a few alerts coming in now. If you were using the strategy, ladies and gentlemen, based on what you're seeing, and remember each box represents a time frame. And green means you're looking for longs, and red means you're looking for shorts. Would you be looking for long trades here or short trades based on what you're seeing? What would you be looking for? Long or shorts? Please type in, everybody. Just give me your opinion. Right? I want you to see what I see. Would you be looking for shorts or long trades based on what the scanner is showing us in the sharpshooter? Right. Yeah. Long, of course, says Jay. Yeah. Okay. Now, over here was one of our strong signals, and it sent an email to my email account. All right. Now, unfortunately, I was in the middle of the presentation here, so I've just seen it come in. It's come in because the software in Infinity, okay, enables you with this system that we've programmed to actually send you either an audible alert, okay, and an audible alert sounds a bit like this. I'll play one to you. So when you actually see a sign of strength or a sign of weakness appear, this is exactly what you're actually going to hear. I'll play it to you. So when the trend starts to align in all of these green time frames like this, okay, this is what you actually hear.
Trend alignment to the upside has arrived.
Yeah, okay, let me repeat that.
Trend alignment to the upside has arrived.
Okay, now, when we see a signal like this, okay, in the trend, this is what happens.
Sign of strength has arrived. Sign of strength has arrived.
So in an uptrend, you're alerted to the fact that everything's aligning.
Trend alignment to the upside has arrived.
And then when a signal appears that says buying's happening,
sign of strength has arrived.
So let's go and have a look at the NQ contract. Okay, 3-minute chart. All right, well, first of all, start with the biggest time frame. Of course, it's going up, right? Because everything's going up. 15-minute chart, you can see down here all the buying that came in, and there's what we call testing of the support line. It was, funny enough, it was at a round number as well at 5700. 9-minute chart, again, you had a number of indicators that appeared as the market began to rally, and down here you can see very clearly where the strengths begin to come in. Now, if I bring up and have a look at where the indicator, we just had another one come in on the NASDAQ, funny enough. It was on the 3-minute chart, and that's just coming as well. Let's have a quick look. Oh no, further down here. So here's the signal which triggered, okay, the alert. That was the signal. Okay, it's called a 2-bar reversal, and it's in an uptrend. All right, now you can see what price action has done. Right, so Tina, if you're looking at sharpshooter and it comes up with strength alignment has happened, what you do is, if, like for instance now, I've got everything trending, all right, I've got a 6S with a potential short. You can see here, right, the 6S contract, everything's gone red, and over here it's alerted a no demand bar. So if we go over to the 6S contract, which is the Swiss franc for those of you that don't know it, and there you can see, right, where the weakness has appeared. Remember what I told you at the beginning, it's very important. They mark the price up before commencing the down move. So the price is marked up before commencing the down move. This is how it has to move, has to work. The markets have to be moved on supply and demand, or the imbalances thereof of supply and demand. Now, Tina, what I do, once I've received an alert, okay, is click here, okay, and restore all instruments for scanning. That resets everything. So now you're starting from scratch. So what I'm going to do now is, if we see a principle here, all right, we'll actually go and look at it. So what you'll see, if we start to see these align, we should, right, here we go.
Trend alignment to the downside has arrived.
Okay, now that's picked up. I think it's the 6S again. Yes, it has. Okay, now they're all lining up. So the 6A, and now when this starts to flash in black, which it will do, you don't left click either box. The software automatically will detect what type of entry you should be looking for, either short or long. So anything that's a red box is clearly short. Anything that's a green box is clearly long. Okay, here, here, and here. Now, that means the software is now triggered and it's set. So as soon as a VSA principle comes in, either to short or to go long, the software will alert you. For instance, in the British pound, the small time frames are rolling over, but the big ones aren't. If you read the strategy document, it's very clear. Now, the 6N is almost, it's 4 trends of a line. Now look, it's on the NQ again. Let's go and see what happens here, all right? Let's go and see what happens. So you've got a principle on the NASDAQ, the 3-minute, okay, just triggered, and it's now flashing pink. Flashing pink means potential trade. So let me just go to my charts here. Let's put that in there. Right, let's go straight to the NASDAQ. You can see it's flashed. You can see here, everything's green. We've got a test. Right now, we want confirmation of that test. So what we'll do is we'll now watch. Okay, we'll watch this closely. Now the next bar, notice that this green signal was solid because the next bar closed higher. So this next bar needs to close higher. Okay, now if it closes higher, okay, I would expect the market to reach the 5775 level. All right, if it closes lower, and I've just taken trade, I'm long on this trade, right? If it closes lower, right, I'd scratch it. We've got to wait to see. But the reason for it is quite simple. If we look at the 30-minute chart, we're coming up to an old top, so it's probably likely to try and have a look at that old top. The 15-minute chart, again, we've got an old top to the left and it's approaching it. If you see a test on a bigger time frame, it's going to have a bigger move. The 9-minute chart, same deal. Okay, we've got this wide spread up on an increase in volume, but the market's in an uptrend, remember. And here on the 7-minute, where we've had these 2 confirmed tests, the first one was confirmed, the second one was confirmed. Okay, and then again here on the 5-minute chart, you can see the accumulation and the market trying to push up. Now, when you see very high volume on these up bars, okay, like we see here, the market will have to push through it. If it comes down and someone said, where would you put a stop? Right in the middle of that bar, because that's where, if it goes through there, it's going to retrace. Because we've had a pretty good move. 3-minute chart. Okay, now, we haven't confirmed or succeeded with this test yet. All right. If the next bar closes higher and pushes higher, realistically, the 5775 level, which is a round number, will be where they'll go with this particular chart. But loads of comments coming in. Gavin, what time zone do you have on your charts? Yeah, it's I'm on Chicago time. Okay, Chicago. Yeah, sorry, Piotr, I've just answered that. I'm on Central time on the charts. Right, secondary test, very common. Right, look at the volume here. Coming down, they're testing this high volume area. Okay, so this could go both ways because that test has not been confirmed yet. So if they're bullish, they'll blow this up to the upside. If they're still not ready, they'll retest the low. That's one of the things about trading. That's why you put stops in place. Because if you take the trade and you're in a trade, and let's keep in mind that there has been multiple entries in this uptrend. One there, one here, one here. They are marking this up. It is looking bullish. And gold, as I'm about to explain the gold setup to you, right, because I know a couple of you emailed me about it, I will explain the logic behind that and the British pound. Because of the YouTube videos that I do, we've had an awful lot of emails have come in with questions, which is great, which I love to answer. I'm always happy to do that. And what we see the questions are is, why is ultra high volume the starting point of a trade, and then low volume the actual trigger of that trade? And it's really straightforward, right? Is that the high volume is the activity of the smart money, and then the low volume is the confirmation of what they're doing. So there's been another alert come in here on gold as well, and it's based on this principle. Supply is entering the market. Now it hasn't. There's, again, in the sharpshooter, you're going to see it hasn't triggered anything. All right. In the other instruments here, we've got potential short coming in on the Japanese yen. So again, we'll go and have a look at that. 6J. And let's put the 3-minute up. Yeah, I can see what they're up to here. So you can see in the downtrend here, same thing's happening. The market's moving down. They mark it up. Supply enters. It's a very simple process. No demand means no interest. And over here, you've got an upthrust. All right. Now, it's a lot of support has come in at that price level where that green line is, which is why I would be personally patient at the moment on that particular instrument. Okay. Because for that very same reason, that if you see the market moving like this in a downward movement, you always want to make sure, and this is very important, that you look for the weak bars, and they happen, okay, as the market is marked up. Okay, as the market is marked up. Okay, now interestingly enough, on the NASDAQ, the test at this moment in time has not held. Okay, you can see the market here testing. When that happens, okay, wait for the next opportunity, because they'll mark it down and buy it. You'll get another opportunity, because all these opportunities that have appeared, right, and it's the same in the ES at the moment. I'm seeing the same sort of thing, right? In the ES, they've marked it up, okay, into this area, but they're bringing it back down where they bought it before. You can see where the buying came in, climactic action, and this area at the ES now is quite important, the 2437 level. So let's restore all of these, and let's wait to see if gold triggers as well. Right, while we're doing this, right, there's a few questions coming. So, right, what's causing? Good question. Good question. Trevor says, what's causing the red and green arrows to print? What's causing them? Good question. Simple. The imbalances of supply and demand, Trevor, are being measured in each of the time frames. Okay, the imbalances of supply and demand. So again, here, if we look at the gold price here, we can see supply entering the market. Down here, we can see quite clearly here what we call climactic action, stopping action. Look at the volume, and the market then gets tested, as you'll learn. If you read my book, it all explains it anyway, which you're going to get a copy of. But if you read the book, it explains it in detail. Now, interestingly enough, when we look at the gold chart, I want to just show you the reason, going from the biggest picture down to the smallest picture, why the market at the moment is falling. So let me quickly put my screen up. Okay, and let's just put up the 5-minute chart. Now, let's put up the GC contract. Let's put one lot in. Now, just going to show you quickly. This is not ready to trade at the moment. You've got to wait. But we're coming into the London fix, right, which happens in 1 minute. And for those of you who don't know what the London fix actually is, the London fix is when they actually set the prices, okay, of what the market's going to do. So you usually get a decent move. Now, when these big volume bars happen like this, okay, I can go down to a small time frame, like the 3-minute chart is the one that we'll use, and we'll see if we start to change behavior in the market, meaning that the market now starts to fall because the volume's here. Now, we don't take the trade until, and let me just explain, that the market's gone below this bottom of this bar, right? Do not try and trade in this bar, right? Always look for the market to take out the bottom of this bar and then go back up there on what we call no demand. Now, you can see that very clearly on the British pound when I show you the daily chart. Okay, right, can everyone see, man, this is where the 3 parts of the price bar are extremely important. Yeah, I'm going to do that right now, Andrej. I'm actually going on that now. So, can everyone see the daily chart of the British pound? This is the daily chart of the British pound. Can everyone see that? Daily chart, British pound. And you should be able to see 3 green, or 3 lines that have been drawn out and projected out from the infinity charts. Okay, good. Right. So let me explain to you then in detail how this actually works. So you can actually prove it to yourself how important volume actually is on the charts. So we start off with this bar here, okay, which came in, as you can see, in April. Now, the pound moved higher, and a lot of traders were saying that the pound could reach 1.4, 1.5, lots of people coming up with these suggestions. However, I want to give you the YouTube channel video, which you can go and watch at your leisure, which is a little bit longer, and it explains before this actually happened, or before the move happened, why the market was weak. All right, so remember, and there's another short video which I did yesterday, which is also on our YouTube channel. And the YouTube channel has got quite a lot of good information. Well, it's got a lot of information on it, actually. It's just www.youtube.com/TradeGuider. Now, if we go back to the chart, I'll build this for you. I'll show you exactly what we're looking for. So remember the golden rule. No, this should be, you should be able to see the British pound, Harvinder. This is what can, I think everyone should be able to see it. Can everyone see the British pound? The UK pound, you should be able to see the 6B. Yeah, okay, yeah, everyone, yeah, okay, thanks. So this is the daily contract of the futures contract, not the Forex, the futures contract, okay, of the British pound. Now, you notice that on the bullish news that came out about the pound, it was marked up with a very wide-ranging bar, closing off the top of the bar, where I've marked the line, and the next bar closed lower. But that was just a warning to me that there was a trade setup coming. Then the market comes back down and goes up another leg, and it has another signal coming in. Selling pressure, right? Meaning that the selling is starting to show itself in the high volume. But if you read my book, which I hope you all will, you'll notice something that I talk about a mushrooming over, all right? A mushrooming over of the chart. And I say that the place to sell into the mushroom is in this downward movement after you've seen this big volume spike, which is true. That's exactly how it works. So you had to be patient. You couldn't do anything here. You had to wait. But with our strategy, with sharpshooter, when the market begins to move, as I've shown you today, everything lights up to the red side or the green side. And today it's been to the red side in gold for certain. So then we come in and we say, right, we can see everything's turning red. What do we have here? The market's gone up to the closing price of this bar, but look at the volume. There's nothing. There's absolutely no interest to the upside here. None. Because the professional money have sold over here. So that's why we then suddenly see the massive fall. But if I jump out a time frame and I go to an even bigger time frame, you can see here very clearly weakness. All right, weakness appearing. You can see here the trap. Okay, you can see over here no demand. You can see the market beginning to fall. And then as you go to the 4-hour chart, you start to see why. We can see that the market has been marked up, which it has. You can see the 60-minute chart is really clear. Even today, right, where we took a short trade, there's your selling pressure. Now that is still in play. That hasn't disappeared, okay, on this pound. This has not disappeared. Okay, so where they trapped the market here, they brought the market back up today, and now it's starting to fall. Okay, and I wouldn't be at all surprised if we get a lower price. Yeah, the YouTube channel, for those of you, Trevor, it's just youtube.com/trade-guider. I'll just put it up for you here. It's very simple. youtube.com/trade-guider. Okay, youtube.com/trade-guider. It takes you to the channel, and in fact, you'll see here, yesterday I posted a very quick video explaining some of the setups that were coming today in gold, and indeed they have set up, as we've seen, because they were happening yesterday. Everything sets up. It always does. And you'll notice in these videos, some of them are very short. They're only 8 minutes long. Some of them are more detailed. All right? So you can look at that there. So let's go back to the sharpshooter strategy. The testing on the NASDAQ has failed, but the trade on the... Now, that's interesting. Let me just put the chart up so you can see it. Yeah, that's definitely going to move. Oh, dear me. All right, I missed that one. But anyway, this was an alert that came into short on the Canadian dollar. All right, and I've missed it, but that's because it's difficult sometimes to trade and talk. But anyway, you know, this is what's happened. All right, we've actually had, and what I'm going to do, I'm going to reset everything again. Let's just see what's setting up at the moment. Okay, let's just reset that. So you remember we looked at this and the yen earlier. You can see how they do the markups, right? It's almost like daylight robbery. Okay, daylight robbery. Look at the markup here, absolutely enormous, right? And that is really what we call choppy markets. But you can see the principles I'm teaching you have to be correct. That weakness, when it appears on these massive markup moves, just like I'm showing you. Now, let's go and have a look. Let's reset the scanners. And let's see. Now, what will happen if it detects any trend alignment now, okay, which at the moment I don't think there's much in the way of trend alignment. We've got some weakness coming in on the Aussie dollar, has been coming down, so that's been a nice one. So, but notice how many charts I'm able to monitor. Okay, you're monitoring, you know, 6 time frames per chart book for every. You can basically monitor every futures contract. Someone said, could I look at crude oil, which has been firing off? Oh yeah. Oh dear me! You do when you get a beauty like that, you can't argue with it. Look at this. This is weakness. This is hidden selling. That's because they were saying yesterday that crude oil is really weak. It's going to fall, so they mark it straight back up. Let's have a look at the 30-minute chart and see what the volume is. Yeah, this is weak. This is weakness. This isn't strength. Yeah. Now, notice that the sharpshooter has not given me a trade on this just yet. Yeah, Piotr is exactly correct. They spike the market up to catch anyone that's short because they don't want them to make money. Then they resume the down move. It's exactly what you're saying. That's live. That's not a PowerPoint chart that you're seeing. That's a live chart. Now here we come. So we've got some potential. Actually, now, interestingly enough, the Dow is looking potentially weak. The Dow Jones. Let me go and have a quick look at that. Dow. Missed it. Oh. See, this happens sometimes, but the Dow, you can see here, right? Let me ask you a question, ladies and gentlemen. Looking at that scanner, would you be looking for longs or shorts in the Dow? Trevor, nothing would have triggered you yet into that crude trade, but there will be one. I almost guarantee it in the next hour. But this is and the Aussie dollar's just flashing up short as well. 6A contract. So we'll have a quick look at that and see if it's. Yeah, the Aussie dollar does look weak. Yeah, so let's wait on the Aussie dollar. Right, let me just get set because I think the Aussie could trigger any minute. All right. What I'm going to do, I'm going to put a resting order just below in this Aussie because it's about to trigger, and I'll put it in. Okay. Okay, so the Aussie has just come up looking weak. Let me come back to this. So that's the Dow Jones, and again, you all said short. Quite right. Quite right. Let me show you. Again, live chart. That was the trigger. This is a 15-minute chart of the Dow. There's your supply entering the market. Yeah, James, they are. They're going for a few at the moment. This could be quite interesting. So this is good when you're doing live analysis. It's far better than doing it, with a PowerPoint because you can see the principles at work. They have to be correct. That's what we call a buying climax. That's one of the strongest VSA indicators that we have in the software. One of the strongest that we have. You just look at the Dow here quickly. Okay, right, Dow's just triggered. Let's have a quick look at the Dow. Right, and I'm going to go to the 3-minute chart here. All right, so here's your markups at the top here. Now, we've got an attempt to support the market. If this fails, it's in a downtrend. Everything's trending down. See, everything's red, everything's red, everything's red, and the weakness is up. That's a much better entry up here, but, that entry, this could still go further, and I'll tell you why. If you look at what's happening, the weakness that's coming up here has, again, I talk about this mushroom all the time. The market has mushroomed over. It's mushroomed over. And when you see that mushroom coming in, right, you can't ignore it, all right? It's weakness. It's not strength. That's how the market has to work. It's weak. It's not strong. Okay, so let's see. So the target I've got on this, according to my point and figure charting, is 1.2340 is the level I'm looking for this to get down to, 1.2340. And I can't explain the reason for that right here, right? But if we see any signs of strength appearing, which we're not at the moment, then you change your view. But there's nothing here. It's weak, right? 5-minute chart, okay? Not responding to any strength, not responding to this. So you would expect this now. 6A, let's have a quick look. Yeah, 6A is going as well. Okay, so let me... All right, let's just stick with the Dow for the moment and we'll follow it through. Yeah, here's your reason. There's your supply entering into the market. So they've marked it up at the open, completely artificially, and now they're willing to move this lower. Yeah, I'll come back to that. A couple of questions earlier on. Okay, let's bring Sharpshooter back up. All right, so here we are. So the Aussie dollar, again, I'll ask you the question on the Aussie. Would you be short or long on the Aussie dollar based on that? Would you be looking for shorts or longs on the Aussie dollar? Yep. Yep. Okay, Dow Jones, YM. Would you be looking for shorts or longs here on the Dow? I mean, look, you can see what I'm seeing, all right? You can see exactly what I'm seeing, all right? So again, the system here, what's making this Dow move is this signal here, all right? It's on the 3-minute chart, okay? It's a buying climax. It's weakness. It's proven weakness, okay? So let me explain it to you. Again, just to be, I'm going to be repetitive here. The market's got the mushrooming over. Okay, here's your mushroom shape. Okay, it's broken the support line on an increase in volume. There's no green signal on this one, but they tried to support it here for 9 minutes and it's failed. It's failed its support line. Okay, very straightforward. Okay, so you know you're in a weak market at the moment. That means that they're selling it. They're selling it off at the moment. Okay, and let's go back to the Aussie. Same thing in the Aussie. Okay, pushing lower. And notice that the trending system that's built into the AT charting platform here is red. And so you've all agreed that when that's all aligning, you want to be looking for shorts. Totally agree. You see here? So at the moment, the two things that are triggered are the YM and the 6A. Right? So the YM and 6A. And here, silver. Okay? You can see it's aligning to the downside. Let's go and have a quick look at silver, because I haven't looked at that today. Oh, look at this, 5-minute chart of silver. One of the signals you don't see very often. In fact, this is quite an unusual principle. All right? It is here a reversal over 2 bars. That will trigger an alert. That will trigger an alert. In fact, if I show you it in Smart Center, that will send an email out for those of you that trade silver. I'll do crude oil in a minute. Here it is. All right, so I didn't take this trade. On the size of account that I've got, I can't. I'm only trading a very small account when we trade publicly. But you can see here the trigger. It's put a box around it which will send an email alert once that principle has appeared. Piotr says, Gavin, from your experience, how much retail traders have influence on the price move? They have hardly any at all. Almost negligible. I'd say, I mean, size-wise, most retail traders that I talk to are trading between 5 lots and 10 lots. Some of them are only trading 1 lot. I mean, in my trading here, I trade 1 lot just to prove to you that you can trade a small account. If you're trading futures, your minimum account size, I'm sure Marcus will talk about this at the end, but really you want $5,000, really. Okay. Charles says, sorry, the grey, what do the grey bars mean? Grey bars. They mean neutrality, Charles. They mean there's no trend alignment in that time frame. Good question. So they mean there's no trend alignment in that time frame, all right? Which is what that actually means. So no trend alignment, basically. That's what that means. So if everything's grey, or you've got a mixture of grey, red and green, which I call the Christmas tree, it means just don't trade, just wait. Wait for the trend to align, right? Which it's done here in the Dow. Now let's go back to you can see here we've got another alert coming on the NQ. They're testing the market here, which is fine. Don't have a problem there. Silver, good example there. Everything's trending down. Everything's red. This is what we call the volume thermometer and the medium-term trending system. They're all proprietary to the TradeGuider platform, which again is a plugin for the Infinity Charting platform. So it's an add-in study that you buy from us, and then we train you. I mean, we offer training. That's what the software is, just part of it. The products that we offer is training and education based on a live trading room and what we call trade alerts, which are based on things like this, which we post into a Skype room. I'm not going to put the Skype room up now, but we have a Skype room. You can find more about that at our website. And the cash market FX price, just follow the contract price. Yeah, that's what I do. Absolutely, Piotr. Yeah. Alex says, if all the time frames are red, is it too late to sell? No. Absolutely not. Absolutely not. Because what happens is in the downtrend, here, they're in a downtrend, right? And there was the entry, and you can see where it's going now, right? Because you'll find a red indicator. This is one of the rare indicators, and I say it's rare because it is rare, that appears on a downward bar, all right? So the market goes up, and then they slam it back down. Then here they're trying to support the market, but it's too weak. It's too weak. Again, I think you'll find a similar situation that's coming in gold now is if we look at the 1 minute chart, right? They've supported the market down here. There's the green indicator. Here they've tested the market, and then now it's been marked up into the old area where previously we saw weakness. So don't be at all surprised to now see a red VSA signal appearing up here. Very likely. Very likely, because they've marked it up. So we'll look at the Aussie. Not moving. So actually Aussie dollar is not really moving much at all at the moment. I thought that would move to the downside. Let's just put the sharpshooter back up. Right, and at the moment, again, you can see here, there's apart from the Dow, which was weak, nothing at the moment is particularly triggered. Okay, apart from the NASDAQ. And I think they're just testing at a particular level. A quick look. Yeah, look. So there's the two tests that we thought were going to be successful. They failed. 3 light green indicators. And then over here, they've just tested that level. So it's very likely that on the NASDAQ, we'll probably see some higher prices here. Okay, let's go back to gold. Oh yes, now gold has moved. Okay, let's put that order in there. Now this is exactly what I'd expect to see in gold. Okay, now I'm going to a smaller time frame here. Okay. Let's see if this turns. So we're going to go to a much smaller time frame. Now, this is based on a very separate principle which marks a market top. Okay, which is part of, again, the strategy. Let me show you it. All right, now this here is the buying climax. That is what we call a potential market top. Now, why? Because it's up at an old resistance point. All right, so it's up at an old resistance level. We know, right, you've got ultra high volume on this up bar. Okay. Right, I've got a lot of questions coming in, so let me try and answer these. Right, can the method be used to trade daily or no? Yes, Douglas, it absolutely works. I trade, obviously, apart from trading futures, I trade stocks on a swing trade basis as well as trading futures. I often hedge positions. We have another strategy called Prism, which works for investment in stocks, but this will work for swing trading. Of course it will. I mean, you can look here on this particular screen. It's a separate screen. I'm using much bigger time frames. See, I'm looking for the weekly, the 8 hour, the 4 hour to align. So I'm using much bigger time frames. So yes, it absolutely does. Now here we can see that the market here has not yet quite changed behavior, but we can see on this very high volume bar, it's turning negative. Now, this doesn't rely on the trend alignment system at all now, because that is one of the strongest VSA indicators that we have in the software. There are several that we can see will mark a potential turning point in a market. Okay, so I want to focus on this chart for the moment now before we I take questions, and we'll have a look to see if these diamonds begin to turn red. Okay, let me just keep an eye on the Aussie dollar because I have got a resting order right underneath here. Nothing happening at all, so I'm not worried about that. Let's wait for the gold. Okay, I do expect this to fall. Yes, don't know how far. It's only a 1 minute time frame, but I'm expecting to see a red diamond come in here. And I've already made money in this contract as well, so I know that, you know, if it starts to roll and it mushrooms, you've got to, this is what we're looking for now. Just so you're very clear, you can't do anything at the moment here, but actually when it mushrooms over, you see these two green lines. Well, there's three green. There's a very important area we've got to pay attention to. It's these areas here, because if it comes down into here, right, and these start to turn red, that means this market's going to roll. And on the big time frames, right, you'll see the principle at work, and I call it a principle. It's a signal. It is really an indicator. Let's just erase those drawings. Just bear with me. Okay, erase all drawings. Good. All right. Now, what I'm going to do, I'm going to stay on this chart for a few more minutes and try and show you the VSA principles as they appear on a 1 minute chart, because they will. The chart has gone. It shouldn't have. No, I'm definitely showing the screen. Kashif, I'm definitely showing the screen. Right. Okay, now here's how I'm going to frame this out. I'm going to lose these lines for a second. All right, and I'm going to frame this out for you. Okay, now you can see that the closing price here is very important, and the bottom of that line is very important. Let me now put the, okay, so now I know on this chart that I can use a very tight stop. Let's move that down. Okay, let's bring the trading dome up so you can see it. It's fine. So the stop is going to be just above where that line is, okay, which is 1246.9. I've got it set at 11 at the moment. Now what I'm going to do, because this is part of the sharpshooter strategy, is I'm going to bring the stop. Let me put it in myself, just 1 second. I didn't put the order on. Let me just do that now. There's your auto center. I'm going to put the stop right above here. So at 1246, 1247.5, right there. Okay. Looks like the stop's already in. So let's just leave this running for a second. My target here is the low here at 1245. Okay, at 1245. Now, if it breaks this area, if you ever have a situation where you can't see a stop in there, you just, if you ever want to, just put your finger over, or your thing over this button, you click on flatten, and that flattens all your position, just so you know that. For anyone that's trading, in case you're not aware, there's a couple of things in this software, which is brilliant, which means you can cancel all your orders, you can flatten your position, and with a situation like where you're going to want to watch a trade, if you've got that button, it fills very, very quickly. Okay, now the target for this is 1245.5. All right, so 1245.5. which is down in this area here. Okay, if it bounces back up or tests this area, flatten the position. In fact, what I am going to do, I'm going to flatten it now and reorder it. Okay, let's just put another order in. I'm just going to wait for a second for another signal. So I've just taken, you saw how quick the fill was on that, very, very quick. All right. Now, I just want to double check. I've double checked that. I've got my stop loss. I've got my profit target. That's fine. Let's put up sharpshooter again, and I'll tell you why I just closed that position, because it's fascinating how the markets work. But this is a great example here. Again, the strategy always says little and often. So we don't want to make any losses there, but you can see here, they're actually testing this level right now, look. So I need to now wait. Don't worry about if you've closed a position out with a profit, and you can see now that the market's telling you something that, hold on a minute, it's pushing higher and they're testing these levels, right? And you've been short, and maybe I haven't found the top on this market yet, so I'll just take a little bit of profit. Yeah. Yeah, well, that's right. And Jim Mooney's just saying to me as well, if you flatten a position using the platform, always hit cancel all as well, because the cancel all functionality basically means it cancels any orders or working orders that you've got left around. Some people use like I do, resting orders, and it has happened to me. It was a while ago now that my broker rang me at first thing in the morning and said, Gavin, do you know you've got a position in the S&P running? It's because I'd left a resting order in without cancelling it. Biggest mistake I made. But when I opened my dome, I was up $2,500. So it was a very profitable mistake. But it's not one I would recommend that everyone does for certain. Okay, so here we can see now there's quite a few things flashing in sharpshooter. You've got the YM again. Now the Dow, that's been weak. It's just come up. Let's have a look at it. Let's go to the Dow. All right, let's see what we got, what time frame is on. Right, okay. So now on this Dow, we've got an indicator showing there's lack of volume as the market's trying to go up here. All right, so lack of interest in the upside at this price level. If the next bar closes lower, that will become a solid indicator. At that point, it's a decision as to whether we want to trade it short. Now, interestingly enough, gold's doing another same thing. Interesting. It's giving me another alert here. Okay, so got an order just below here. Now, again, the target on gold and the key level on gold is going to be 12.45 because that's where the markup happened today. And at the London fix, it looks like they took some profit on the buying climax, all right? And now we've got the red diamond starting to appear on the smaller time frames, okay? So we've got two setups from sharpshooter. One is what we call no demand, that this is not confirmed. So we don't do anything because if you read the dialog box, which is part of our system, it quite clearly says the next bar should be down to confirm the indicator, okay? So the next bar should be down to confirm the indicator. Okay, so I'm waiting for that to happen. While I'm doing that, I just want to draw your attention to where someone asked about the information for Chicago. Okay, the YouTube video, first of all, is here. All right, so the YouTube video is here. It's youtube.com/trade guider. All right, just simple. youtube.com/trade guider. Simple as that. All right. Now, if you go to the front page of our website, I've put now, for a limited time, the book and the video up there for you to download. Okay, now the video goes into a lot more detail on what I've just shown you. And the book, please, it took me a long time to write, do read it. It's got a lot of information in it and it will lead you into, if you want to really advance your trading, one of the best things you can do is come to the Chicago event or the Australia event or the London event, because I found the quickest way that I've learned things the internet's wonderful, but when you're interconnected with people in a room who are all like-minded, the amount of stuff you learn, I consistently learn stuff from traders and investors that I meet, and all the people I've met around the world, I've managed to condense it all into a 2-day course. So if you want to download the book, it's completely free. Usually we sell this course and the book for $97. Just put your email in and your first name. That also means that you'll be invited to a live trading session this week, because we're going to be doing a live trading session in our room, and everyone that goes into the database today If you're already in it, you don't need to worry unless you want to get the book again. But everybody that registers will get an invite to a live trading session this week where I'll go into a lot more detail on how to use the Infinity charting platform. Okay, so I'll go into a lot more detail about charts. If you click on the events panel here on the front page of tradeguider.com, just click on that, you'll see here's the events, the one in July, which I'm really looking forward to, July the 26th, 27th, sponsored by Infinity and the CME group. Just click on that button there and it takes you through to the master key trading events, and it is exactly what we say it is. It's a master key strategy, and you don't need to have our software to learn from it. You might want to have it afterwards, but you don't need to have the software to learn from this event, I can assure you, because we're talking a lot about accumulation and distribution. We're talking a lot about the Wyckoff principles. We're talking a lot about belief systems. We're talking a lot about trading plans. There's a whole session on trading plans. And the nice thing about that is, of course, you'll be able to sit down with me one-to-one at times. We'll have little breakout groups or in small groups, and I'll show you what I've learned from Tom and from all the other experts that I've worked with. I've traded with some of the best traders in the world. And, you know, I've learned a lot from them, but it's important that information is passed on. That's the key to this. You've got to pass on information. Now, going back to that gold trade here. Okay, so we're still in the trade. Let's have a quick look at what it's done. So we've got the buying climax. Okay, so we can see here is a market top signal, right? There's a few of them in the software. Now, if this appeared on a weekly chart or a daily chart, it would have had a much bigger move on price. I think this will go to 1245. Okay, so we're about 8 ticks away from that level. But if it gets down to this level here, we're going to watch the volume very carefully, because if the volume does this, right, if we suddenly see this happen, right, widespread down bar on an increase in volume through that level, that means that this has been distributed. It's been finished. The distribution phase is now turning into trade setup phase. And these type of trades happen every single day if you know what to look for. That's the key to it, if you know what to look for. And it's like everything in life. You don't know, my investor that invested a lot of money in our business, where he was a stock trader, and I showed him what we teach, and he went, my goodness me, if I only knew that years ago. You don't know what you don't know. It's true. Our job as human beings is to educate each other with the knowledge we've been given, and then you as an individual have to make up your mind, is that knowledge valuable? Is that knowledge make sense to me? Can I understand what that knowledge is telling me? All of those things, you know, that there, here, okay, is a very high volume up bar on a narrow range. And if we read it, it says a high to ultra high volume up bar closing in the middle shows supply overcoming demand and indicates professional selling. In order to sell, the professionals have to upload into a rising market by selling to the herd. If they sold on down bars, prices would fall too rapidly against them. This should be into fresh high ground. What does that mean? It means there's no price action to the left, and it's after a strong uptrend in price. So here they've sold into this up bar, but look at the narrow spread, and the clue to it is the next bar closes lower on this chart. So there had to be some selling in there, and you can see what price action has done for yourself. It's not moved massively, okay? Not moved massively, but that doesn't matter. It has moved. And you can see the principle at work, and then you've got to believe in that principle. And once you believe in these principles, you've got that knowledge with you for the rest of your life, as I keep saying. Now, I've only got a few more minutes left, so let's just see what this Aussie's done. Right, let's have a quick look. Okay, that has... And then I'll take questions before we hand back over to the guys. Yeah, it hasn't moved very much, but that's fine. I think we'll keep an eye on gold for the moment. Okay, so 1245 is the target I've got here on this. And that's going to be key, because as you're going to see now, here's the increase in volume. If it takes it out, it's gone. But it's going to test this level here, and that's exactly what they're trying to do. So, again, little and often on this one. stop here through to break even. So I'm at break even now. So if it pops up, I'm going to try and get some money out the trade. So 30 bucks, let's add up, let's keep adding it. If it's whole, so now I'm in a profitable trade here, okay? You can trade 20 lots, 10 lots, whatever you want. Someone emailed me about that. I'm trading one lot just to demonstrate to you how it works, okay? So we've seen the principle. We could have traded the top of that indicator. I waited because I was talking to you. So I missed the entry in here. When that bar closed, it's not a trend trade. In sharpshooter, you can trade the tops like this. If you see the end of a rising market, if you see up thrusts on very high volume, you can trade against the trend. It's not always a trend. You know, I love to trade with the trend, but when you see these key principles appear, you've got to take the trades because they're showing you the market's turning, and they are turning. Jordan, sorry, I've only just got back into the office, so I'm catching up with a lot of stuff at the moment, as you can imagine, preparing for the seminar and everything. So, and with the Chicago event coming up, I'm doing a lot of PowerPoints and stuff. We will be trading live on the second day, by the way, in Chicago. It'll be very similar to this, live trading with the setups explained, and then we'll have you guys that come will get a copy of the software for a month, and you'll be able to actually trade yourself on a demo account. You open a demo account with Infinity. Talk to Marcus or any of the guys at Infinity about that, and yeah, absolutely, you'll get an opportunity to try our $29,000 hedge fund software for a month. So you'll actually be able to try that when you're in Chicago. This is the sharpshooter though, Steve. I saw your email earlier. It's different from the hedge fund software because the hedge fund software does a lot more. Sharpshooter is literally set for the time frames that I showed you earlier. All right, and you can actually set sharpshooter for a 1 minute chart. Someone asked me that. You can do that. Yeah, it will set a 1 minute. This is a 1 minute chart that we're looking at the moment right now. Okay, while I'm in this trade, I'm going to keep going, Marcus, just for a few more minutes, if that's okay with you. I wanted to keep it to 90, but we are in a trade here. So, all right. Is that okay with you, Marcus?
Yeah, that's fine.
Yeah, while we're in a trade, we may as well show the dome and show what's happening here. So again, the entry was at 46. We can see here, we could have entered up here at 48 when we saw the principal appear around 1247.60, which would have been much higher up. But I took the trade here based on the change in behavior. The diamonds turn red, as we can see. Everything's turning red on the small time frame. And I can see we're at an area where the high volume came in, and look, we're approaching it. We're not far from that 1245 level. It may still get there, but I'm not greedy. If it spikes on an up thrust, I don't want to lose money. Not on this trade. Okay, and we're still in the Aussie trade, and we got closed out on the NASDAQ trade earlier. So again, we'll watch and see if this moves lower. Okay, Australian dollar's gone up on no demand on the 15-minute chart. Good. And NASDAQ's popped up. NASDAQ's now moving higher. So it just tested the lower level. Right, so let's... Okay, let's go into that. Okay, so I'll come back to the NASDAQ in a minute because I want to show you that. This is now testing the low of this high volume bar. All right, if this fails, you'll see what I was talking about earlier, the move down. But very often, before they take it below this level, they'll whipsaw it in this area. Very, very often, not always, but very often. Justin, yes, the VIP can be modified. Yes, it can. Yeah, you need to talk to me about that because the VIP package, we've done a special on it. You need to email me personally, which is gavinh@tradeguider.com. Don't go to the website and do it because you'll go through to the sales team directly and they don't have the ability to do promotions like I do because I own the company. So my personal, you have to put a telephone number or preferably a Skype address would be helpful. And then I can work out a deal for you on the full package. That's fine. We've got several people that have emailed me on that. I just haven't got back to you. If you're in the room and I haven't got back to you, I've been literally rushed off my feet with some of the hedge fund stuff. So I haven't got back to people. But tomorrow I've set the whole day out for talking to people if they need help. So that's fine. Yeah, it is. It's the full. We can do it with the full Smart Center package. We did a promotion on it a while ago. Right, hold on a minute. Let me focus on the trade here, because this is starting to show exactly what I'd expect to happen, and I want to catch this, because now you're going to see a potential what I call gotcha bar, and the gotcha bar can move pretty quickly. So let me just focus in on this for the moment. I know that I've got my. Here it comes. Here's the gotcha bar. Here they come. All right. Let's see if we can lock in bit more profit, which we've done. This is exactly what I expect to happen. Okay, this is a very clear, and it's, you know, the sharpshooter strategy picked up the trade. It wasn't me. It picked up the weakness, and you know, that's how it works. Okay, now there's a bit of strength coming in. If this fails, okay, now look how I'm chasing this trade using the Infinity platform. Beautiful. Very simple, nothing complicated. You've got your entry point, you're in your profit zone, you've locked in some profit, you've already taken some profit here, and look at the speed of the fill. Look at the speed of that. Right, now, can I get in again on this? Yeah, there'll be another opportunity, because look, they're coming in all over the place. In you know, got another one here, and I'm still in the trade in the NASDAQ again. Let me just show you that. This is what I teach people, that it's so important. If you're trading live, and I'm sure Marcus will confirm that's exactly what I'm doing, that we're not trading on a simulator here, that's because I'm confident in what my strategy is. I know what my strategy is. I know that the strategy works. Yeah. Okay, and I'm going to do exactly the same thing here. Try and rescue some of my... Okay, so I took the loss earlier. Now what we're going to do is part of what the sharpshooter tells me to do. To get stop to break even, right? I've got two different entry stops there. So what I'll do is we'll put that one and that one right below here. Okay. And then I'm going to lock in some profit already, just to make sure, okay, that I wipe out the loss that I took on that initial trade, which I showed you was because of a failed test. Brilliant. Flattened. Now, when you see that happen, okay, so I've lost $10 on there initially. I'll show you why. It's probably going to whipsaw here. Cancel all, flatten. Okay, cancel all, flatten. Okay, so let's have a look at what's happened here so far. All right, on that gold trade, it's set again. I can't believe I've got another setup. Oh my goodness me. Okay, so yeah, we've got it. Let me show you. Okay, let's put up the shooter again. So there's, oh, listen, then, you know, you're not always going to make money in the market every single trade. You've got to learn to be patient and take it back. And if you see good setups like we've seen in gold, and I think there's another one coming right now, but I'm not going to have time to take the second entry for you, but at least I can show you it. Again, can you all see my screen? And I'll just be ready to take this. Let's put the trade up here. Okay, so we're going to trade here, just the one lot. Okay, now I'm waiting, because remember I told you this level was important, 1245. It's hit 1245 to the tick. To the tick. There's no accident. I'm not going to explain to you how I know that, right? Because that's proprietary information that I'll share in Chicago and the other events. There's a reason I was able to project that on the 1 minute and 3 minute charts. Now, if it takes out 1245 now, okay, then it will really run. All right, so you've got to be ready. Now, I might want to put another, I've got to go out, unfortunately, now, because I've got a meeting, but I would be putting a resting order down here, waiting for this to push lower, because it's weak. And again, you saw the buying climax. That's a classic example of what we call the up thrust. It's a serious, serious sign of weakness. Yeah, Justin, if you contact AJ, if you've already brought the Smart Center, he can show you how you can. There's a document that allows you to change those settings. Have you read the 40-page document that Gregory built? You need to get that and read it, because it will show you how you can do it. Yeah, Douglas, this is sharpshooter. This is the strategy called sharpshooter. Let me just show you. This is where I've been taking the trades. Let me be very clear. You can see here today, right, we've had trade alerts to the long side on that NASDAQ. That was the long trade on the NASDAQ. It came in just here, and we also had here the stopping volume. Okay, if you look at what the NASDAQ actually did, okay, you can see that there was finally the test that was successful. These here, I took a trade in here. I was expecting a breakout. They came and retested. There was the confirmation, and I went long on the next bar. So I got my money back. Now it's a resistance, but if it tests again, it's very likely to break out again. So here, using the sharpshooter strategy, I just come in, restore all instruments for settings. I think the Aussie dollar could be a potential one to the downside still. So I'm still short on the Aussie. Not moved very far though, 20 bucks, but it's actually showing some good. It's interesting on the Aussie dollar, right? You can see here the 6A, right? Let me ask you all a question. Looking again at sharpshooter, would you be long or short based on what you're seeing here? Would you be long or short based on what you're seeing in the system? Don't take my word for it. What would you be looking for in the Aussie dollar? Yeah, I mean, convince yourself, guys. This is real stuff. This stuff will work for you. All right, this is live. This is not looking in hindsight, and you can see why. Look over here. All right, we've got a very classic principle that we also saw in gold. All right, just here. A trap up move on the Aussie. Now that came in, what, 4 or 5 hours ago? So go to the 30-minute chart and learn from it, right? You can see here that what we've, that's the NASDAQ, let's go to the Aussie. So here, 30-minute chart, this is what they're doing. They've trapped people, they've gone back up to the top of the trap up move on no demand, all right? And you can see the trend of price has clearly been going down all day. Now, again, you've got quite a few things triggering here. That's interesting. I don't often see that, where the NASDAQ's triggering some shorts and the NQ's triggering longs. But the Aussie now is definitely looking for shorts. All right, you can see it here. It's flashed. I've left click. It's triggered. There's another one, natural gas. So now that's another one, the New Zealand dollar. So now here, I'm sniffing. Not me personally. See, the computer program is sniffing for trades. Right? It's saying that I've already shorted the Aussie. I'm already short because I can see on the 1-minute chart, if I show you, where they've been marking this up. It's actually quite obvious. All right, so here we are. Here's your weakness, just here. Okay, and you've got another sign of weakness just here, and you've got another sign of weakness just come in. Right, now it's telling me that supply has come into the market here. Now, if it takes out the line, again, you can mark this very easily. It's not difficult to do. In the charting package here, you just do a vertical line, horizontal line. You mark the bottom of the day's action, and you wait to see if the volume will take it through there. Okay, and if it does, it's confirming you're in a clear downtrend. The diamonds, these little, I call these diamonds, they're actually dots, and they're represented by dots in the software program. And what that basically does is it tells you that the market is trending down in the short-term time frame. But I can also see, if I look at the big time frame, where the weakness is. Okay, here it is, right at the top. Right, you've got very clear delineation of weakness. Let me just erase that. And if I show you what the signals are, it shows you supply entering the market. Okay, supply coming in, 2 bars. And you can see the reaction, and now it's starting to break down. 1-minute chart, now it's breaking down. Okay, now I've got to go out, so I'm not going to leave this train running. So what I'm going to do is just take a little bit of this off. But you know, it's there. It's not hardly moving. This instrument does not move like gold. So generally speaking, in situations like that, I like to try and cover my commissions. And again, just say a little bit and often. You know, it's not moved really very much at all. You can see it, certain instruments move quicker than others. It may break down. If I can get 50, 60 bucks out this trade now before I go to my meeting, I'll be happy with that. Again, notice, I'm not trying to be greedy. I'm not trying to say, oh, you know something, this is going to go another 10 ticks or 20 ticks. Actually, the strategy says you go for 11 ticks if you read the document. It's not telling you to be greedy. And it's always teaching you how to manage your risk. So while we're watching this, is there any questions? Because we've been going for nearly 2 hours, but I didn't want it to keep it that long, but there's been a lot happening. You've got a copy of my book, read it. You've got a copy of the video. If you need to contact me, you want to buy the software, you're interested in it, you can go to that page where you download the documents. If you scroll down to the very bottom of there, you'll see what the pricing is. And we do, as you'll see, let's just put the front page of Trade Guider up for you. The front page of Trade Guider is just simply tradeguider.com, which we can see here. If you click on the front page, if you want to come, I hope you're going to come join us at one of the events. Love to meet you. There's still some places left as well. So you can, because we only launched it last week, but we will sell out, I'm pretty certain. Go to Trading Strategies, just here, click on the link. Okay, and then if you click on the Sharpshooter Strategy, which is a strategy, I must repeat, it goes with a document. There are 2 documents here you can download. You want to look at the futures document here. Scroll down to the very bottom of the screen, right at the very bottom, and you'll find that we've just changed our pricing over the last week to make it available on a subscription basis, on a month-to-month basis. We sell the hedge fund software here in the UK for £29,995 because we aim it at banks and institutions, and that's where our business is here in the UK. But we are a retail company as well. We've been selling to the retail market for nearly 17, 18 years, and Tom Williams was selling to the retail market for 15 years before I took over the company. Okay, I think I've just been filled there as well. Yeah, so we just got a quick fill there. So overall, again here, reduced the loss on the NASDAQ, small profit on the Aussie, and again, you can see in gold, much more opportunity today in gold because I'm a bear and I took the bear stance. And again, 3 trades there today on gold. The first one I had to record for you, but you'll see that you know, the strategy in Sharpshooter was firing off shorts. Okay. Trevor, when I say triggered, it means it broke one of the high volume bars, right? Just to be very clear, it's triggered because basically, I mean, right now, let's go to the gold chart, all right? You can see here it triggered because I marked the top of this very high volume bar. And as the market then began to what we call change behavior, read my book, Trevor, seriously, read the book. It's all in there. I don't have to explain it, it's in the book. There's the mushroom, there's where it triggered because it broke through the high volume bars. There's no accidents in the market, guys and girls. Once you can read the charts, there is no accident. If you want to be a professional trader, come to Chicago, come to Australia, come to London and become a professional trader and get rid of all the rubbish that you've learned, because I'm going to teach you the most important part of all of this. Isn't just chart reading, it's gratitude. Being grateful for learning the knowledge you have. It's knowing you're confident to take trade. You've got to be confident. If you listen to me, I'm a confident person. Why? Because I've learned this. I know what I'm talking about. You know, when I was a policeman, I got trained for 2 years. I was confident when I was a police officer. So when you want to do something in life, you've got to have good educators or teachers. And I had the best, Tom Williams. So I was very blessed and very lucky to spend many years with him. But the knowledge he gave me knowledge that very few people have. And the only really knowledge that he considered the insiders use. I don't quite agree with that. I think the knowledge is fairly public. If you look at the Wyckoff method, it is public. It's public knowledge, and it's definitely there. So remember some rules, what I've taught you today. Weakness, when it appears, happens on markups like this. All right? Any questions before I go and hand over to Marcus? And Marcus will confirm, by the way, just to be clear and for clarity purposes, that I was trading a live account here. This is not a demo account. I have a live account, and just want to be very clear on that. You can tell it's live because it's got a number, and it's, you know, a lot of times people want to criticize educators because they do all the stuff in hindsight, but they never actually put their, you know, what's on the line. Well, we do at Trade Guider, and we have a live trading room. We do it every day. And look, we don't make money every single day, but, you know, the room itself, come and see it. Come and see it for yourself. If you become a customer, especially if you buy Sharpshooter, you'll get access, a month's access to that room to support you. Am I an Aussie, a Brit, or Irish, says Jim. You should know better. I'm clearly Irish. You must be able to tell by my accent. Definitely. All right, so there's no questions by the looks of it. Look, the other thing I'd say to you is if you've got questions about what we do, you're going to find it quite difficult to get hold of us because we're, you know, there's only 4 of us that are traders that can take questions, and we get swamped. But the guys at Infinity, and there's a lot of them, and they all know a lot about our business. They will be able to set you up with a demo account ready to download the Sharpshooter strategy onto. Give them a call. Marcus will give you the details. They're all great people over there. You know, I've worked with them for 15 years. And as I said, you know, brokers sometimes get a bad press, but Infinity I've always found the customers that I've recommended, and there must be well over 500 or 600 now in the 15 years that we've done, probably more than that, have always told me it was the best decision they did to move their account over to that company. So All right, great, everybody. Marcus, I'll hand back to you. I think a very successful session. Hope it was recorded. Do send me with a recording, Marcus, and I'll get it blasted in the database. And on behalf of everyone at Trade Guider and the team here, we wish you God bless, good trading and constant profits. Over to you, Marcus. Thank you.
Thank you very much, Gavin. Very much appreciate you coming in. I know that you're an extremely busy individual, jumping all across the globe. So when you come in and do these presentations, we do enjoy it and had some action today. Gavin obviously was doing some live trading in his account, excellent trades in gold. So very exciting. As he did mention, if anyone in this presentation that does not already have a live or demo account, please come and check us out, guys. It's absolutely free. You get unlimited access for a 30-day period to test. It's not delayed data. It's coming at you straight from the exchange. So please take us up on that offer. If you don't get in contact with me, you'll be pointed in the direction of working with someone else. So before we get going here, guys, I wanted to just switch the screen really quick. Change this center. All right, I hope that's coming in. All right, so we sponsor something that's called a live trading challenge event. It actually just ended today, but if you guys want to register for it, please come to this website. It's www.livetradingchallenge.com. The next event is going to be August 23rd through the 29th. Then obviously we have Gavin's event as well, which is July 26th and the 27th. If you guys haven't made it to Chicago before, please come down and say hello to us. Chicago's absolutely gorgeous this time of year too. So if you can make it, please do. You can register on Gavin's website directly. And that is, again, July 26th and 27th. But before we get going here, something I want to go over, which is a risk disclosure. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Have a couple questions here. Yeah, I mean, in terms of risk capital, guys, call into your rep here. Everyone has a different financial situation. So you just definitely need to deposit with risk capital, which is obviously money that can afford to lose. James, the charting software that you saw Gavin using, it's embedded with a program. It's called AT Charts. It's based off of Sierra Charts. I'm not sure if you're acclimated with them or not, but it is extremely robust in its capabilities. So if you haven't already, jump on a demo with us. Like I mentioned, you can get unlimited access to live data coming straight from the exchange. So it allows you to, paper trade in an environment that's as realistic as possible. All right, no more questions are coming through. All right, guys, thanks, James. Thanks, everyone, for coming. We do appreciate your participation. Let us know if you need anything at all. We enjoy interaction with anyone. So give us a call, shoot off an email. Then, of course, if you want to sign up for that live trading challenge event this upcoming August, please do. And then we have Gavin's live event hosted here at the CME, which is going to be very exciting, July 26th and 27th. All right, thank you. Appreciate it. Bye now. Oh, Charles, before I go, Charles is asking about the book. You can go directly to his website, Charles. You just got to register, and you can download the free ebook. You're welcome, Charles. Have a good day. Bye, guys.